All right, guys, back to work tonight. Another great day comes to an end. Hope you guys made some money out there. One of those days that reminds us why we love being traders. But we're back to work tonight, though, right? Tuesday evening, getting ready for a very big Wednesday trading session. We get some big news tomorrow. We have some great charts and some great trades setting up for Wednesday's trading session. We're going to cover a lot in tonight's video. I'm going to cover all my favorite trades in tonight's lesson to make sure you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe so you don't miss tomorrow night's video upload. And as always, if you guys enjoy the content tonight, do me a favor, will you? Hit that like button. I appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get ready for Wednesday. We get some great charts. We get some great opportunities setting up for Wednesday's trading session. Well, as you can see, the earnings reports we talked about in last night's video newsletter. Earnings, of course, right now have given the buyers a good boost. Earnings are very positive here this afternoon. Buyers have a lot of the control right now in the short term on the Nasdaq and the S&P, but when you see these charts here tonight, you'll quickly see why the buyers might be walking into some bull traps up here. I've got some great bull trap shorts off the highs here. Now, I will definitely make sure we're prepared for a possible breakout. We've still got some pretty nice targets overhead on the Nasdaq and, of course, on the S&P, so I'm definitely not afraid of some bullish breakouts. But when you guys see the charts here tonight, you're going to see why, the buyers, they might have control right now, but unless they can really hold this breakout, they could be walking right into a bull trap for tomorrow. So we'll talk about how to make some money on the bull trap, and we'll also talk about if it is not a bull trap, it is a bull breakout, we'll talk about the game plan to make some money there. Well, we talked about oil last night. I talked about oil. I was still giving those buyers a little bit more wiggle room on oil, and they completely disappointed me or let us down right today. I'm kidding with you. We're a bear market right now. We'll talk about this tonight on the video, but bear market into a trading range. Talking about bull traps, right? Talk about bull traps. I got some great spots overhead. We'd love to get some buyers roped in for some shorts, and we still haven't reached that $80 a barrel yet on the oil, so I definitely have some breakouts going lower. In fact, I've got breakouts going lower on all three of these markets here for tomorrow. So as you can see, a lot of traps. Got some great bull traps we'll talk about tonight. We'll have a game plan tonight no matter what the market throws at us on what could be a very wacky Wednesday. Now, talking about Wednesday, real quick before we jump in and talk about all the trades I'm tracking for tomorrow. Tomorrow, Wednesday, we do have some news tomorrow. We, of course, have housing starts at 8:30 Eastern Time and that beige book at 2 o'clock Eastern Time. Outside of that weekly oil report at 10:30, those are pretty much the big known news events for tomorrow. Housing starts, of course, at 8:30. We'll see if the housing market continues to cool. And the big one tomorrow afternoon is that beige book, because obviously the markets are obsessed with the Fed. The Fed is obsessed with inflation, and so we'll be listening in tomorrow afternoon, 2 o'clock Eastern Time, to see if the Fed has panicked yet, right? To see how much panic they have right now, because their efforts to slow down the economy and slow down inflation have, for the most part, not worked just yet. The big earnings we're seeing this afternoon, we saw another record-breaking inflation number last week, so that beige book will definitely be something on our radar for tomorrow. And then don't forget, tomorrow afternoon, we do go right back into earnings once again. We talked about this last night on the video. Really, tomorrow afternoon is kind of the only stuff you got to worry about the rest of the week this week. There really isn't much until we go into the biggest week of earnings season, which is next week. So you definitely don't want to miss next week's newsletter videos. But just like we saw this afternoon, don't be surprised if we see some extra volatility into the closing bell tomorrow afternoon. Today we heard from Netflix, United. All the earnings came out pretty strong this afternoon. We're going to see if Tesla, if IBM, right, some of these bigger, again, if you recognize the company name, it'll be important to pay attention to. So we definitely have some big earnings coming out tomorrow afternoon. And what that definitely tells us is be careful into the closing bell, 3:30 and later tomorrow afternoon. So be aware of that. Housing starts at 8:30, beige book at 2 o'clock. earnings reports coming in. We got some more big news coming later on this week, so make sure you tune in tomorrow night, and we'll talk about the news scheduled for later on in this third week of October. Back to our charts, though. The money is made on the charts, right? The news is great. The news is a great catalyst, but the money is made. The game plan is put together. The game plan is executed on the charts. Now, whether you trade one of these markets or you trade all of these markets like we do in our trade room each morning, make sure you watch all the way to the end of this video tonight, guys, because you will learn something new. You'll learn new profitable strategies throughout the entire video this evening. And you know me, I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around, so don't miss the ending. I'm going to go NASDAQ, S&P, and we'll wrap tonight up on the crude oil futures. Let's go the NASDAQ or the QQQs or the micro NASDAQ. I have a lot of students right now in our trade room making money on the QQQs or the micro NASDAQ, so it all works. Heads up real quickly though too, this is a 4,000 tick chart. You can see all the time frames in the upper left-hand corner. They are all tick charts. I do believe tick charts make our job a hell of a lot easier as traders over time charts, so get some tick charts. Also, to be aware, the NASDAQ and the QQQ are very similar these days to the S&P and the SPY. So I'm going to talk about the NASDAQ first. We'll cover different scenarios on the S&P here in a moment, but be aware, they're very much interchangeable back and forth. They're very, very similar game plans for tomorrow, so I'll do my best not to repeat myself too much on this video. Now, there are 3 key insights that are tipping us off to where the best money-making opportunities are going to be tomorrow. The first one, of course, is an overall bear bias. Look at a 4-hour chart, right? 4-hour chart, daily chart. That will tell you the best direction in the long term. Why is that important? Well, a bear bias tells me I have to be thinking about shorts as the market goes higher here. Now, I will say, if the buyers can get a couple days in a row here, we definitely have seen some bullishness over the past couple days here. So obviously, buyers are trying to retake the directional bias right now. We're not there yet. But by the end of this week, if the buyers keep holding, if the buyers can get another breakout going higher, we may be shifting to more of a medium-term bull bias. We are not there yet, though. We are definitely not there yet. Bear bias, 4-hour chart, daily chart. I would like to look for ways to short the pops and short the breakouts going lower. The second clue is arguably the most important clue on this chart, and that is multiple trading ranges. You'll notice there's a very small range right there, very small range right there. If you watch this newsletter often, we see these quite often where there's 2 ranges, and basically what you'll do is combine them into one range. And of course, when you have one range, the market's going to want to rotate back and forth. So think about this as basically one big trading range. The sellers, of course, they want to sell high. That's where you get those big bull traps, right, up above the high. Buyers would also love to break out, right, through that high. But like I mentioned earlier, they have to show us, right? They really have to show us some proof here. So sellers would love to sell off the high. Buyers have to really show us some proof of a breakout. That's why I said earlier, there likely are some bull traps as we go. And then down here, right, at the lows, right, the buyers want to buy off the low. The sellers need to show us some breakout strength going lower. But that's one of the big components on this chart right now. Think about this as basically one big range. I want to sell high, I want to buy low, and I want to trade the rotation back and forth. I'm going to talk more about trade the rotation in a moment, so stay tuned for more on that. Next up, third one is more short term. The range at the low, you'll notice what's happening right now. The market comes below the range, and now we can have slingshot. We talked about these slingshots last night on the video. Why is this important? This is important because anytime a market comes from below a trading range and swings up like this, it creates quite a bit of strength, right? It creates a lot of momentum going higher, and that is a very important part for entry timing, right? That will tell us how to time the entries properly on this. So now that we know kind of the key components here on this, and you kind of know what's going on in my head right now, how do we make money on this? Well, I'm going to talk about as we go higher, I would love to sell back down right into that trading range. Also, too, later on in this video, I'm going to talk about if the market rolls over, how we can buy it off that low, and also, too, how we can break out and go lower, because there is a ton of open space down there for those bears. And again, with that 4-hour directional bias being so bearish right now, there's a lot of potential for a bear breakout here. So we'll cover the upside here first, and then we'll cover the downside here as we go deeper into this video lesson. The most important thing right now, kind of knowing the situation, that big trading range, and knowing that rotation off the low gives us some strength going higher here. The key is going to be being patient for the short. Now, you'll notice I've got this trading range drawn up. I've marked up basically the amount below the range to the amount above the range. This creates a level of resistance, and we are right there right now. So in all reality, we may not get that bull trap up around those highs and back down. This may be all the buyers get at this point. The problem we have right now is we have a series of higher lows, and we have a relatively strong pop off that low. These are pretty easy. What you want to do is you want to use that trend line. That trend line is your best friend. The strength of this move coming off of that low tells me I have to respect the bullish momentum in the short term. That tells me to use what I call the 2-try rule. Let the buyers try once, let the buyers try twice. The trend line allows me now to use that trend line as a key area of resistance. Again, follow along with me on this. The strength off that low tells me if I want to sell short, I have to respect the buyers in the short term. Let them try at least twice. Right? Let them try at least twice. Once they try twice, hopefully I'll get underneath that trend line, and I can use that trend line. Again, it can be your best friend or your worst enemy. I can use that trend line for that short running down. That's an easy way to make some money going back down into that trading range, because again, we are sitting right at a key level of resistance, so I do want to keep that short in mind for tomorrow. Now, one variation of this that you want to kind of be aware of, a lot of times what happens is it will give you that 2-try, but it won't go back up to that trend line, right? Like this. It'll come down, it'll try to go, and it'll go there. If that happens, that is 2 tries, but I don't want to chase it going lower. I want to sell high. So the best way to do it, if it doesn't give you that short off that trend line, is to look left, find a prior swing, and use that prior swing for what I call a trap entry. Make sense on that? Target is where? Back down to retest the low. Those are 2 scenarios I'll be watching for the short to go back down. Again, we are at that pendulum swing resistance up overhead. Now, what if the market keeps on going higher here? If we keep going higher here now, this is where those big, juicy bull traps are likely going to come into play here. There are 2 scenarios that you want to think about. One is as we go higher, we're in a great location to sell short, but we have what? A lot of bullish momentum, right? Now, anytime we see a strong move up, the buyers in this case are going to want to retest that level. Once they retest the level, I can get a lot more aggressive on my short going lower. Before we retest the level, I have to use a special reversal pattern called a crown reversal. We strong run up, right? We take out some of these highs in the overnight. Now, the strength of that move says be expecting a retest of that level. This is a very important part of picking the bull trap. At this point now, I have to respect the buyer's short-term momentum and use what? And use the 2-try rule. Let them try once, let them try twice. Now remember, the odds are pretty good they're going to retest that high. So I have to be careful being too aggressive on this short. This is why I say it requires a very specific type of reversal, which we call a crown reversal. I use the 2-try. And because the buyers have all of that momentum, I want to use that bull trap, right? It's basically a 2-try with a trap to sell it back down again. That is one of my favorite reversal patterns. Again, at the top of that range, could be a beautiful bull trap for us. Now, here's another one. Let's say we now go up. Right? Strong move there for the buyers, and now they are successful. They do pull back now. Let me back this one up a little bit, right? They pop up. They pull back. The buyers are successful now, and they retest like we saw earlier in the session today. Now, as we always say, mission accomplished. Remember, it's a big range. This is not a breakout I feel comfortable buying yet. We might see him break out. We'll talk about that in a moment. But if the buyers can retest that high now think about it, right? The smart money traders are buying low. Now let's trap in some of the weak hands. Now let's, again, remember, it's a bullish short-term move, so I do want to use the 2-try rule. But now, once those buyers get caught buying right into those highs here, think about where their stops are. Think about where their, as I teach it, where the pain is, right? Think about where those buyers are yelling, uncle, 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 right? That's where I want to be selling. And this is an easy short going lower for what could easily be a 10x, a 15x reversal back down into that trading range. Remember, strong move up. If they retest, rope in those buyers, use their stops as fuel and short into those stops. The easiest money you'll ever make is using stops to hit your profit targets. Now, your job is not done yet. Okay, this is where the good stuff comes. This is where the real money is made, right? This is where the easier trades are. Now, as the market now rolls lower, you know there's a big range there, right? You know where they want to go. They want to take out the other side of that range. This is why I said earlier, trade the rotation. We're now going to mark a trend line off that low. We're going to mark a channel off that high. With me so far? And then drill down, look left, find a prior swing. And you want to grab, as we always say, the first test is the best test. You want to grab that first test, right? This could be any of the entry patterns that you guys learn in the free trading course. It could be a trap, right? Bull trap. It could be a buyer failure above the 21 moving average. It could be a pullback combination. It could be a strength trade going lower. Now listen, I know that most of you guys have taken the free classes. You've learned all the entry setups. You're making money with them. I get so much great feedback from you guys every day. So keep it coming. You guys inspire me. But listen, there's a lot of folks here today that haven't taken that yet. If you're one of the few folks who haven't taken the free course yet and learned these types of sequences, what I'll do is I'll put a link up here for you, upper right hand corner. Grab that link. Take the free course. The strategy I teach in that free course will get you into so many more easy winners. It'll help you avoid some costly losses. And most importantly, I'm going to give you a roadmap to follow each day as part of that free course. It'll give you a ton more confidence, right? I have a lot more confidence in my trading when I have a system to follow. So if you're trying to make the jump into full-time trading, that free course will give you a great roadmap to follow. If you're missing too many good trades right now, or you're taking too many losses, or you feel lost out there, definitely grab that free course and you'll love it. And let me know what you think too, right? Send me some feedback because I'm always trying to make that free class even better. Now, one more here. What if we go higher here now and we don't get 1, 2 back down, right? We don't get the retest and the back down from there. What if it goes up? Right? And then V-tops, right? What if it goes up in V-tops here? What if we simply slam right back down and start running back into that trading range? Those are tough. Getting these V-tops, picking those tops is not an easy job because it feels like it's never going to stop, right? So I'm not a big fan of picking tops and bottoms. You'll learn more about that in my trade room. What I am a big fan, though, is whenever I see a V-top like this, I can easily grab that new channel off that low, or grab a trend line off that low, grab a channel off the high, and you got it. Mark up those prior swings. Above that prior swing is almost always where the best entries will be. Traps above prior swings, buyer failures off the moving average. You'll learn a whole lot more about those in that free course, right? So if it does go up and V-top back in, don't chase it as it's going lower. Find that new channel and be ready for, as I always say, don't miss that first test of that new channel. Now, I know what you're thinking. What if we go up, right? What if we go up and we break out, right? Because I mean, look at the NASDAQ. The NASDAQ has a lot of open space overhead. The NASDAQ is definitely open for a breakout. We talked about that bull target last week, 11,729 3/4. The S&P has a big spot, a big target overhead here. So what does a breakout look like? Now remember, there's a lot of reasons not to like buying at these highs. However, if I can take out these highs, right? If I can take out these highs, if I can pull back to the moving average, and if I shouldn't say a miracle, but if the buyers can come in, if they can hold this, because it could easily happen. Again, earnings reports came out very strong today. We try not to have any preconceived ideas or opinions, right? We simply wait for the market to hit that high and we trade the reaction. I think I know what's going to happen, right? But again, I want to be open-minded so I'm not blinded by my own, biases, if you will. Anyways, once the buyers pull back, if they jump off that moving average, game on, baby. This is a breakout, right? Now, remember, I'm not going to buy that pullback, right? That's a pullback you wait for to fail and take it back lower. If we do see that 1, 2, 3 breakout, bingo. Now we know, trailing off that high, find that channel off that low. And as always, I like to look left, find some prior swings. And again, I'm not going to go into all the details in this right now, but all the patterns, right, you guys learn in the free course, the traps, the failures, the pullback combos, the strength trades, right? All that stuff can be taken off the low of that channel. And then keep in mind too, the size of that first leg is almost always the size of that third leg. All right. Now, we have a pretty good idea of where the market wants to go. We got that range overhead. We got a big, juicy bull target up there. So we have a pretty good idea of where the market wants to go. But when you get one of these 1, 2, 3s, right, and you grab that new channel as we go higher, and you're wondering, okay, where is the best exit up there? It's almost always first leg, third leg as you go. And then one more I would keep in mind here too would be a pop and grind. So let's say, for example, the market pops up and begins grinding higher, right? It could easily happen. If that happens, draw that trend line off that high, right? I know it seems backwards because it pretty much is, and then find that channel right like that. I know it's tough because you want to chase after it, but promise me you will not chase this thing higher here. Wait for that pullback. Get underneath the 21 moving average once the bears come in and try to short this thing. Remember, anytime we see a strong move in one direction, what's the game plan? A retest of that high, right? Get those bears roped in, let them try to sell short. All their stops now are sitting right there, and bam, we can buy right into those stop losses. And then what do you think? Is there a possibility here we might get that strong breakout, trap in the bears, get an easy winner back to the high, and then what do we always say? Mission accomplished, and then 1, 2, and then drop it back down again? Wouldn't that be fun tomorrow, right? That would be one of my favorite scenarios if we get a breakout, right? By the way, this sequence right there is the same thing I talked about earlier. Right? We get that strong run up. We buy the pullback. They retest the high. The weak hands come in. They get trapped in. We're selling into those stops. And again, we're grabbing the first test off that channel for possibly a massive dump back down into, again, that big trading range. All right, so that's going to give you some easy roadmaps to follow as we go higher. Be ready for some bull traps, but be open-minded to a bull breakout. Now, here's the next big question. Right? Here's a very possible scenario. What if we get that 1, 2 back down again? Now, how do I buy it? Right? How do I buy it off that low? More importantly, how do I sell it off that low? Because the Nasdaq's got a bunch of space opened up below. Let's grab the S&P and let's take a look here. Over on the S&P, very, very similar here on the E-mini, right? The one thing though about the S&P right now is you can see right away that bull target is in a very tight spot compared to the Nasdaq. The S&P has made a lot more ground up than NASDAQ. The NASDAQ has quite a bit of open space there, you can see, right? A lot of space there for the NASDAQ. So if I had to guess tomorrow for one of the marks more likely for a breakout, you got the NASDAQ, right? The NASDAQ has so much more meat on the bone up there that would easily attract breakout buyers. The S&P, not so much. Right? Because by the time we get that breakout going higher, we'll be running right into what is a very big level. Open up a daily chart right now, and on a daily chart, find that 38.20. It's a beautiful bull trap area on a daily chart. So it's very difficult to justify buying up there on the S&P. Keep that in mind for tomorrow. Again, keep in mind, if we see a strong enough move, it will be buyable, but only for a retest. right? If we see a strong enough move going higher, I will buy that pullback looking for that retest. Because again, anytime we see a strong move, we expect that retest. But don't be getting too aggressive up there because of that limited available space overhead. Now, where did we leave off? You can see there's a lot of the same stuff here, right, on the S&P. I've got that trend line coming up, right? It's the 1, the 2, the sell off that trend line, or it's the 1, the 2 with that trap, right, going lower, or it's up and back down again. We've talked about that already. I won't bore you guys with the details once again. Now, as we go lower, right? As we go lower here, how do I buy off this low? Well, first of all, we talked about earlier about how the rotation off the low of this range, right? We call this rotation off the low, right? It's a rotation off the low. That gives a lot of strength there for who? For the buyers. And because of that strength, I have to use the 2-try rule to sell back down again, right? Because it's a very strong move that might be retested. Well, what if it happens now the other side, right? What if we end up rolling lower here? What if we go all the way back down? Now, think about this. Right? This is a little freight train for the bears right now. So be very careful trying to what? Trying to buy off of that low. These are very, very common breakouts where we see a short-term bear market into a range. We run up, the bears sell into it, and this thing just sprints and runs lower. Right? Buyers who try stepping in front of that freight train, they get run over because again, it is an overall bear market right now. Now, again, like the Nasdaq, the S&P this is not even a big deal right here. That 68.25, that's basically a paper napkin if this thing steamrolls down on through. But we've got look at that space, right? Wide open space down to 3,600. And what is that blue line down there? That's the prior week close, right? That's the low after that big, right, liquidity squeeze that we saw. Think about how little volume there was right there, right? Think about that, if you guys are market profile theorists or auction market theorists, right? There is a vacuum waiting to be filled down there because there's no volume being traded hands right there, right? So this could get very, very good for the bears here if they can get that short off the high and run this thing back down because, again, it creates that slingshot going lower here. So let's talk about this, right? Because this could be a very big part of tomorrow's trading session in our trade room. As we go lower, the two scenarios to buy this market right now are going to be that crown reversal. Because, again, when I see a strong move, I have to respect that pullback and a retest. All right, so what I'll do is I'll wait for the bears trying once, I'll wait to try twice, and I'll grab a trap. The reason why that trap is so important here, and you can see a small one right there, right? The reason why it's very important is because when you have a bear market like this, you don't want to buy as the market's going higher. You don't want to buy as it goes higher because there's going to be more bears up there, right? As it goes higher, like back here, right? We make that run lower. See that? The bears once, the bears twice. If you buy low, you can make money on that. But if you buy high, you're walking right into what? You're walking right into the bear momentum right there. So this is a great example here looking left. That's a good example of what we need over here, right? We need to buy as low as we can because if you buy high, what's going to happen? You're buying right into, because the sellers want to sell high, right? Sellers will keep on selling into it as it goes higher. So long story short, take out that low, trap in some of the weekends. This is not a good place for a short, right? Not a good place for a short. You're at the low of a one big range basically. Okay, let those bears get trapped in. Use that bear trap for that long going back higher again. Okay, that is not my favorite trade, but it is one of the options for tomorrow. Whatever you do though, do not buy it as it goes higher here because this could easily give you a little nibble of profit. Take your first profit target and then roll right over, right? You'll be thankful you got in at that trap and not getting in up here. Let me see over here. Okay, now the much more reliable way to do this is again to let it retest, right? They take out that low, they retest that low now. Now the weak hands come in, right? Now the small money comes in. The inexperienced traders who are learning this business right now, they now try a couple times, and now you've got the bears have already retested, right? So mission accomplished. The pressure is off now for the bears. And the weekends come in. All their stop losses now are sitting right around that high. Again, I'm going against the short-term momentum, so therefore I have to use what I call the 2-try rule. You'll learn a lot more about 2 tries in our video classes, and then once we get that nice strong signal, right, I'll look for that buy going back up again. Where are targets in this situation? Target 1 at the other side of that trading range. Target 2 taking out some of these prior highs, right? Look left. Find some prior swings. I can also measure the amount below the range, project that back above the range, and that will give me a good final objective from there. And then what do you think? Is it possible now that that's what happens tomorrow? We pop up mid-morning, 10:15, 10:30. Buyers go, we're free. And no, 1, 2, and back down again. Because again, it's a big trading range. Right? So this could be a very, very good day for traders tomorrow. Buy low, sell high. The big thing is you have to understand how momentum picks up when it goes above the range and then runs lower. That's a freight train right there. We got to be very careful. Just because we're the low of that range doesn't mean I can just step in front of that freight train and buy. It won't hold a lot of times. It will keep going. Now, how do we do the breakout? What's a breakout look like? The most common breakout you'll see in these kind of slingshot environments is going to be that spike, that pop and grind breakout. There are a number of different breakout patterns we use in our trade room. One of them, when it slingshots off the high like this, is that pop and that grind, right? The grind is always the giveaway. It's very common for these little slingshots off the range rotation because it just that momentum is so strong. So we mark off that low, we mark off that high. Again, we're not going to chase the market going lower. We're going to stay patient because that's the glue that holds a profitable trading career together. If you want to make money every day, you can't be a gunslinger, right? You've got to be patient and wait for a good trade. The best trades are always selling high at resistance or buying low at support. Once I get that pop and that grind running lower, that will get us now above the moving average, and as always, get above prior swings. I love prior swings. That's where traps live. Get above the 21 moving average. Get the buyers coming in and foolishly trying to buy that pullback. You will be shocked how many times buyers will try to buy the bounces in a very bear market. You can use their stops as fuel to make some very easy money. Let those buyers come in, let them try, and you can sell them stops, failure pattern, pullback pattern, right? And then again, remember that first leg, that third leg will be a very, very good target for us as we go lower here. We have a lot of space down here, right? Plenty of space as we go. Or we take out that low, right? Take the low out. We pull back, right? The bears try a couple times and they blast and run out of that range now. We call these 1, 2, 3 breakouts. When I see that strong jump off the 21, that tells me now the bears have now broken free of that range. We don't chase it. We mark up that trend line. We find that channel. We find those prior swings, and we don't miss that first test, right? And again, we'll use any of the entry patterns there that we can get our hands on. First leg, third leg, that'll give you a good idea of where that target is. Another one you want to think about for tomorrow is if we do end up back at that low and this thing just keeps on running, strong run down, shallow pullback, lower low in price. These traps are usually pretty good trades, pretty easy money trades. Again, if it really blasts through, strong move, shallow pullback, lower low in price, that's the key. The lower low in price confirms that is now a swing high, and a swing high is where traps live. That would be a 2-try trap. And as we saw today, right? As we saw today, we saw that big blast up. What did we talk about last night? We said, listen, if we get a big move overnight, what do? You find a bigger channel, right? You wait to get what? Underneath the moving average. If you watched last night's video, you prepared for that. Get underneath, trap them in and go, right? That's exactly what we talked about last night. The same thing could happen here tonight, right? Going higher. Could easily happen going higher or going lower, right? Let's say, for example, they roll over in Asia. We get this big blast, right? Big blast going lower. What I'll do is I'll find a bigger channel I'll wait for a deeper pullback because after all, nobody wants to sell low. The key is find that bigger channel, get above the moving average. Just like the bears got trapped in below the moving average this morning, we'll look for the bulls to get trapped in above the moving average if it makes that run going lower. Again, anytime we see a strong move, you're expecting that retest of that low. All right, so keep your eyes on those breakouts. A couple of breakouts we've covered here tonight, and we'll know more tomorrow. Lots of great trades we're watching for tomorrow. I'm getting excited just talking about it here with you guys here this evening. The game plan's right in the NASDAQ and the S&P. How about some oil? I talked about this in the introduction. We talked about this last night. I was giving the buyers the benefit of the doubt earlier this week, but it's pretty obvious now. The demand crush on oil is done. OPEC, they cut their they cut their production last week. They obviously saw this coming a mile away. We're back to a bear bias now on the crude oil. If you recall from last night's video and last week's videos, I talked about that big run higher we saw earlier this month, right, putting us up around that 90 area. And I was expecting the buyers would come back at some point and retest that level, but clearly that is not happening right now. Apparently the gig is up right now on that oil bull run. And so for right now, until something changes, we have a bear bias here now on the oil. 3 key insights, right? The bear bias says I'm looking to short all the pops going higher unless we see a very significant breakout. Strong move down. Anytime we see a very strong move in one direction, what do we expect? A pullback and a retest of that low. Now you will notice there is a strong move higher as well. So what does a strong move higher tell us? It tells us that to expect that retest of that high and then look for that short back down from there. That is a very important part of this analysis here tonight. And the third clue is that range with rotation, that should say rotation off the high. This, of course, is a trading range. Back into that range there, up, rotation off the high. What does that do? It creates that steamroller effect as it tries to slingshot and run lower. Knowing all this information, right, and without repeating myself too badly from earlier on in this lesson, how do we make money on this? Remember, the key right now is you can see right away that strong move up. Everybody wants to retest that low right now. As we go higher, take out that high, let them retest, rope in those buyers. 1, 2, sell back down, grab that new channel. You got this. We've talked about this a couple times already here tonight, right? Grab the new channel and back down we go, right? Strong move up, let them retest. It could be a bit higher too, right? It may go a little bit through that high. Like we saw today on the Emini and the Nasdaq, trapping those buyers, use their stops as fuel, and we're selling it back down to retest the low. Let's say, for example, I get a level up top here around that 85, around that prior week close. I would not be surprised if oil gets a strong run higher. Now remember, if we see a strong run higher in an overall bear bias, what are the 3 ways to do it? The 3 ways to do it are, one would be we go up, we take out these levels. We now look for what? We expect a retest, right? Because it's so strong. We look for the crown reversal. The 1, the 2, the trap, and the short back down again. That could be an easy 10x, 15x trade for a winner back down to retest that low. Or the buyers hold that pullback, they retest the high, mission accomplished. Now we can get a lot more aggressive now, right? Because now the buyers got what they want, rope in those rookies with the 2-try rule, use their stops as fuel, and sell into those stop losses. Your job ain't over yet, right? This is where the fun begins. Mark that low, mark that high. You got it. Don't miss that first test off the high of that channel, right? That's the second one, the second scenario to sell off that high. The third one is the V-top, right? We go up, we collapse right back down in. Very difficult to pick those tops, right? It's difficult to pick those tops. We pop right back down, we grind down. This is an easy one, right? I know it's tough to watch it go without you, but trust me, it will be worth the wait. Mark that low, find that channel high, find those prior swings, and again, don't miss that first test off the high of that channel. V-tops are very, very common right now. Just the way the markets are behaving lately. A lot of V-tops, a lot of V-bottoms. The key is not chasing it as it goes lower, because smart money out there, right? Smart money, they want to sell high, right? They don't want to sell low. They want to sell high. As soon as it pops up, all the big money players are shorting into that pop here. That's a third way to be a seller as we go. And, as I said earlier, I'm not opposed to being a buyer right now, but they're going to have to really show us something, right? They would really have to run this thing higher. Run this thing higher. The buyers would have to hold that pullback and go. And even then, we're running right into some major levels overhead. So it's very difficult. There has to be a lot of bullishness here overnight to really warrant us buying pullbacks off the low of that channel. And then again, because of this rotation off the high of this range, as this thing goes lower, if it goes lower, right? If it does roll lower here, think about that 1, 2, 3 breakout, right? 1, take out the low, pull back and jump off that moving average, mark that low, mark that high, find that short off the high of that channel, right? That one's pretty straightforward. We've talked about that a few times already. First leg, third leg, right? That'll be an easy way. We know the bears have one thing on their mind right now. If they take this thing lower, and then a 78.5, 78.13, 80, right? 80 should be a bit of an appetizer, I would imagine, for the bears. 78.13, 78.42, that's the level they're trying to get to. Or it pops and it grinds, which again is very common on these rotations off the high. We go up, we rotate lower, all that momentum pops, it grinds down. You find that hidden channel off the low, mark off that high, right? Mark off that high, and you got it. Grab that trap, grab that failure pattern, all the setups we talk about in the free video course, right? Grab those shorts off the top of that channel. And as always, right, if we get a huge move down, right? If we get a huge move down, don't chase it, okay? If we get a big move overnight, what do? You find a bigger channel. You wait for a slightly deeper pullback. Why? Because we don't want to sell low. And if it really makes a huge move while everybody is sleeping, when they come in, they're going to look at this and go, that's way too low to sell, right? It's too low to sell in there. Get me above the moving average. Get me up on the high of a bigger channel. Rope in the buyers. Once those buyers start thinking about buying, once they commit off that moving average, I've got resistance overhead, all that momentum for the bears. The target's back to that low, and we're selling right into those stops using a simple failure pattern, a pullback combo on the way down. So if we do see a really big move down, find that bigger channel, wait for that deeper pullback, and get ready to sell into the stops out of those buyers. All right, guys? Boy, great plan for tomorrow. Lots of bull traps. Again, be ready for bull traps as we go higher, but be open-minded to whatever the market throws at us. Because again, we don't want to let our opinions of this cloud our judgment, right, and leave us to be biased here tomorrow, because that's the way you make mental mistakes. If you are so convinced that one side of the market is going to win over the other, keep it fluid, keep it liquid, right? Keep your mind open. And of course, tomorrow morning we'll do it together. Right? One of the nice things about my trade room is that you can learn and trade along with me. We'll do it all together tomorrow morning, 8 o'clock Eastern time. If you're missing too many of these trades right now, definitely grab the links. I'll put the links in the description of the YouTube video. Grab the links, get registered. I'll see you tomorrow morning, 8 o'clock Eastern time as a brand new student. A great place to begin, though, is the free trading course. I'll put all the links in the description. You can grab them there. And if you have any questions, any problems, don't be afraid to call or email. I'm always here to help out. We have live chat on the website as well. So we're only a couple chat messages away from getting answers if you need help along the way. All right, guys, I've taken up way too much of your time this evening. Have a great rest of your evening. Hope you're enjoying the beautiful weather this time of the year. You got to love the month of October. But tomorrow morning, back to work tomorrow, 8 o'clock Eastern time. I will see you there, hopefully. If not, we'll come back tomorrow night and we'll put a game plan together for what could be a very good Thursday as well. Guys, my name is Joseph. Thank you so much for tuning in and watching this video here tonight. If you enjoy it, hit that like button. Make sure you subscribe, and I'll see you guys next time. Adios, amigos. Bye-bye for now.